Good day, ladies and gentlemen. It's 23rd of January 2025, and today the Nifty weekly expiry has taken place. This week we have accrued a profit of 0.4%, taking the January profits to 1.5% with another week to go in January. So let's see. Now, this week people kept waiting for the pre-budget rally, which didn't come, and what came was a jump in India VIX from 14 to 17.5 levels. That is almost 25% of the jump in India VIX, what we have seen. It happens before the budget, and it also affects the uh, returns of the option selling strategies. So we'll see. So this week we saw a flat Friday and a Monday, and which was not in the same line as the previous few weeks. But all the hell broke loose on Tuesday. What a drama! Market gapped up nearing 23,500, and thereafter had a unidirectional movement downward right till 23,000. That is all right, but then within moments it shot back to the morning levels, and with the speed it came up, it went down again to 23,000, and this time broke 23,000. You could call it an N-shaped move, or you can call it a reverse N-shaped move. It was the Sensex expiry on that day, minded, and Nifty made 1,300 points move, all ups and downs combined within a day. And this kind of movement, when the market is at 26,000, when market was at 26,000, is okay percentage wise, but market has already corrected 12%, so the volatility should drop proportionally, but it seems to be increasing. 7 lakh crores lost, read some headlines. Others called it Black Tuesday. And here it is. There's a snapshot in one of the famous Telegram channels which said no option seller could have survived this loop. Yes, that is when the market shot up and went down. However, by God's grace, we just had to make one adjustment on the day, and when we made it, we were still in profit with our conservative strategy. And thereafter, till this week expiry, we maintained the profitable positions and made overall whatever I told you. Uh, in the second part of this video, you will see the day-wise exact positions and simple adjustment which we made to end up profitable. But before that, I want to share some important thought process on the HNIs, or the people with considerable amount deployed in the market. Now, if you and me, we are finding it so difficult to withstand such major fluctuations in the market, think about the people who have invested huge amounts in the market. The brokers call them high net worth individuals, or HNIs, and one such day they can lose crores of rupees in the market. The general perception in the market is that all HNIs have access to the inside trading information. They know things even before they are released to the normal public, like us, or they have these software engineers working for them to prepare the ideal algos to capture every move in the market. Even we think that these are the people who are actually moving the market. Uh, well, the fact is something different. Even people with the capitals of 30 to 40 crores do not have that sort of luxury or influence, to be really honest. Their order quantities are so big that if they are trading in strategies like straddles, the quick entry and exit itself causes huge losses due to slippages. I remember I was trying calendar strategies a while ago. The backtesting results were so great on the simulator, but once I tried it to place these bulk order with my capital, which is nothing great, no way I'm considering myself as an HNI also, but with the bulk order which I placed in Zerodha, firstly, the order quantity restriction was 1800 for Nifty and 900 for Bank Nifty. That became a major problem. And then came the slippages. You place an order, whether in limit or in market type, the moment order was placed, the algos are actually working against you to automatically move the prices away from you. Sometimes you create basket orders and all won't go through. The margins were calculated based on the margin benefits of buying the hedges. So almost in all this schmozzle, it used to take me about 15 minutes to execute one complete set of orders. And by the time the positions were actually taken, I would see on the screen a MTM loss of 1%. That became the start point. That is not an easy position. That's not an easy trade to take when you start off with minus 1% just due to slippages and all these problems while taking a trade. And then exiting was equally difficult, even if it showed that MTM profit is 3%, say in a weekly or monthly position. By the time you exit that complete set of orders, you would lose around 1 to 1.5%. There again, the entry 1% gone, exit 1 to 1.5% gone, and this is condition with us. Think about what is going to happen to the HNIs. So at those times, one would really enjoy being a small trader. You just place some order on your mobile phone and market order, and it just gets executed in no time, right? Now, HNIs may have their unique set of problems, which also includes their restricted screen time, which they can dedicate. And they do often hire people who, by the way, have limited understanding of the market. Or some of them, like our motorbike, will just dump the money with some shady group of traders. Or somebody like Mr. Big Fellow will go to big banks, and big banks will have the fancy plans called wealth management, and they will charge very high fees for them. Now you may ask me that how is it relevant to me or to you? Well, now no matter what is the capital size, if you value your hard-earned money, if you feel pain at your losses, you are an HNI in your own right. That money is dear to you, so you are your own HNI. And it's worth following the steps of the big players, that what they are doing. How are they protecting their money? How are they protecting the money in such kind of volatility? And inculcate good trading habits. Let's drop the idea that everybody is an inside trader and everybody is, having some master plan and master option strategy. It's not like that. So focus on your trading habits. So what is the difference? Well, for us, for everybody, the trader, the normal trader fraternity, what is our main focus all the time? It is always on the strategy. How my strategy is doing, what are the back testing results, how I'm going to adjust. Even before you take position, one is almost wanting to make the adjustment. It must have happened with all of you. And however, if you are an HNI, if you are approaching your trading as a business, apart from the strategy, you will be focusing on other two key aspects. Yes, one is capital management, and then comes the strategy, and the last one comes the tax planning. The normal traders, we start in the strategy and get finished in the strategy. We never come to these two aspects of approaching the trading as a business, which is your capital management and which is your tax planning. So I hope some of us do graduate to that level, and we focus more on these things. The truth is, strategy is only one part of the complete system. And if you have relatively safe strategy, relatively, not some flashy strategy, relatively straight strategy with easy adjustments, with low drawdowns, with negligible slippages, HNIs are happy with their realistic and steady returns. Okay, that is one aspect which I understand. And capital management, well, even you are doing it without even realizing. Now they must be having certain shares for a long time in their portfolio, and they must be pledging it. Even you can be doing it because most of you must have bought some government securities or gold bonds and then pledging it to do your option trading, right? So even you are doing it, right? Tax management, all of us are aware that how we can do our tax management. But first you have to be profitable, consistently profitable, and you are able to lift your focus just from the strategy to the other aspects, correct? Now, if you talk about the strategy, how do they achieve it? That is strategy, the point that it is a safe strategy, it is easy adjustment, low drawdowns. Now, you might be thinking that I'll speak only about this Nifty Strangle 2.0. No, it is not like that. There are other strategies as well. And one of the simple thing is that buying good quality shares for long term. Okay, doing some portfolio revisions, quarterly or once in a year, something of that sort, right? And if you can pledge them, you can get into some sort of an option selling, which is very safe, selling far out of the money options just to keep getting some money, extra money into your returns, right? Or else, if you are purely into the option selling part, what you can do is to increase the distance. In Nifty Strangle 2.0, we have seen that we go for far OTM. Now there is another option. What Mr. PR Sundar has made very popular is going for the 1 year expiry options, leaps. That is December expiry. There what you are doing is you are going away in terms of time. So that is one way. I have tried it, and but however, unfortunately, the market moved so much. The MTM losses shown was very high, so it was not palatable to me. But a lot of people are doing it in a good way, and that's one of the workable strategy. So other option is that you do it for a short term, like a weekly time frame, and you go far away from the your center position, and then you do your adjustments. So in any case, you are going far away, either in time or in the strike prices. Okay, and those who are following my videos or are member to this my Telegram channel may have got some of the insights. However, if you don't have the basic understanding or time or resources, you can contact me through Telegram and WhatsApp. My number is 81590573779. I'll repeat it, 81590573779. I'll give it in my description also. You can contact me on Telegram or WhatsApp. I'll try and help you out in the best way possible. If you're looking for some other options in terms of other sort of mentorship or some sort of this thing, do get in touch. That's the only this thing. So now coming to the day wise position for this week. So on 16th of January, that is last Thursday, market defended that level of 23,300. And maybe it was just respecting because of the expiry, because 17th January, the moment market opened, it opened below 23,300. It was around 23,270 something. So from there the market started falling, and it made a low of around 23,100. Anyway, so at 9:25, the market was at 23,211, and as we do on Fridays, we take the position around 1,500 points down and 1,200 points up. So we took a strangle of 24,300C and 21,850 PE, quite a wide range. And then we have our daily adjustment point, as you must have learned by now, 300 points on the downside, 225 points on the upside, and these were our adjustment points. As you can see, market made a high of 23,292 and low of 23,100. In the gist, market didn't touch any of our adjustment points, so we carried the position overnight to the next day, that is 20th of Jan, Monday. Market was again extremely flat over the weekend, and that gave us a nice little premium decay, uh, despite the fact that the VIX was going up. So there was a premium decay which was we got, but not as much as it should have been over the weekend, especially as the market remained at the same level, and that was primarily as the VIX had gone up, and as you all know, it was because of that pre-budget effect. So on 9:25 on Monday, again it was the 23,211. So we squeezed the strangle further. On Mondays, we have the position 1,200 points on the downside and 900 on the upside. So our strangle was 24,200C and 22,000P. Adjustment point, again the same, 300 points down and 225 points up. Market made a high of 23,391 and low of 23,170. So did not touch our adjustment points. So that was on one side a good situation, but VIX rising and 2 days flat market was a perfect recipe for another major movement in the market, which we saw it on Tuesday, 21st Jan, Tuesday or Black Tuesday, whatever. So on Tuesdays we normally take our position 900 points on the down and 675 points on the up. So market opened, I think gap up around 23,407 was the position at 9:25, and we had our strangle at 24,100C and 22,450 PE. And we had our adjustment points, which was very important for this day, 300 points down and 225 points up as usual. So lower trigger point was 23,050. Upper trigger point was this. So entire day, what a move market had made that day, you already know. I won't repeat it again. But at 2:35, the market crossed the level of 23,050. So despite 23,000 level uh, available for taking the support, but as we follow the strategy in complete honesty, and there is no this thing divergence mostly. So on 2:35, as the market crossed, we closed this triangle and deployed a fresh triangle at the same distance, that is 900 points down and 675 on the upside, which came to effectively shifting this triangle downward, 22,150P and 23,800C. Now Wednesday we usually do not close in the strangle further until unless there is a major shift. So market was at 23,099 at 9:25 or opening, and mostly we maintained the same strangle, and we just took the points that if the market crosses 23,360 or 22,750, that is the time we will be shifting the strangle with the same gap as Tuesday. So the high on that day, Wednesday, was 23,169 and low was 22,981. So it did not touch our adjustment points. So we carried the positions overnight, and today morning it opened at 23,128. So on Thursday, because of this new margin ELM, extreme loss margin, that's becoming a major headache for us or for all the option traders, that invariably there is a margin deficit that is shown. So notwithstanding, we simply just squared off the position. As such, we have to square off the position and take the new position. So for Thursday, as we take normally around 550 points down and around 400 points up, we took those positions for Thursday, and our strangle was coming at 22,600 on the downside and 23,550C on the upside. And for Thursday, we have the midpoints as our trigger points. However, the today market made a small little move, but thereafter remained sideways. So we could close the position in peace, and we accrued the weekly profit of 0.4%. So now coming to what are we expecting in the last week of January. Well, first of all, the budget is coming. Okay, so VIX will keep on rising. That is one part, and that makes the job of option seller a bit difficult. Monthly expiry is also there, and apart from that, it is going to be a monthly expiry for all the indices. So next week is going to be tricky. Okay, and but however, what is going to help us if you see it in a positive way, since the VIX is going to be higher, the premiums are going to be good. Number one, and second, as the expiry is taking place, I think on 30th, yeah, 30th of January. So the time decay is going to kick in. Time decay is going to kick in, and that is also going to work in our favor. However, during the budget week, I will advise to stay away from the market, and from Friday, Saturday is also a trading day this time, and Monday also. Friday, Saturday, and Monday, please avoid trading. You can take positions if you want from Tuesday morning once all the chaos is over, or if you are still wanting to go ahead for this weekly trade with the budget included, uh, go even far more wider. That is what my this thing is. Advice to all of you is, and if you do so, just do shift your positions in timely fashion. However, I will not advise that you take a trading on that period till Monday closing. Apart from that, hope you are liking this video series. Do share with anybody who is interested in safe and conservative strategies for option selling. Like and subscribe if you want to. It is going to boost our morale. So thank you and thanks a lot.